In this video, I'm going to break down how I generate passive income using leap options, specifically through silver trade on SLV. This is not a get-rich strategy. This is about time, structure, and macro alignment, using a framework I've been modifying over the last few weeks called the Wolf Leap Doctrine. When I talk about passive income through options, I'm not talking about weekly or monthly contracts. I'm talking about long-dated leap options that allow me to express a thesis over multiple years, which define risk, less emotion involvement, and far fewer decisions. This approach fits naturally inside the retirement style portfolio, where the goal is to let time and macro cycles do the heavy lifting instead of trying to out-trade the noise. Before we even get into charts, it's important to understand the macro backdrop behind this trade. Many countries are actively trying to move away from the US dollar as the backbone of their monetary system. You don't have to agree with how fast it happens, but you do have to acknowledge that the pressure it creates on the long-term dollar regime. That's why the 2025 to 2028 window is interesting from a precious metal standpoint. The 2028 leap isn't a bet on specific outcome. It's a bet on that at least one of the macro paths play out over the next 2 or 3 years. Those paths include disinflation with growth wobble, which would most likely push the Fed into an easing cycle and drive real yields lower. 2, a softening US dollar, like I just discussed, or at least a dollar that stops persistently strengthening. Or 3, renewed inflation persistence, driven by energy cycles, commodities, or geopolitical supply shocks. In all 3 scenarios, precious metals historically perform better than they do in an environment of rising real yields and a ripping dollar. The key point here is not prediction, it's optionality. A 2028 maturity gives the thesis time to express itself across multiple macro regimes. To express the macro idea, I compare GLD and SLV side by side. GLD as in gold and SLV as in silver. As you can see, gold has already made a strong extended move. Silver historically tends to lag behind and outperform later once momentum rotates. Now, looking at the percentages, gold is underperforming SLV. However, they just broke their height here from April 2011. So silver has way more room to grow versus gold, who just broke their high from July 2020. From a structure and asymmetry standpoint, SLV offer more upside relative to where price currently sits without needing perfect timing. However, we have the wolf chart, so you can always get perfect timing. Okay, now I'm going to show you where I entered this SLV trade. So I entered on a 2-hour candle on December 15th at 10:30 after it made a fresh inverse and retested the 12 and the WTMA cloud. But let's look deeper on the macro time frames so I can tell you why. So as you can see on the monthly, it is far extended above the WTMA cloud, the 12 EMA cloud, and the WTMAs and signal. That's on the monthly time frame. I got in right here. As you can see in the monthly time frame, it's been making fair value gap after fair value gap, which is extremely bullish. Go ahead and drop to the week over here. As you can see, I got in exactly on a fair value gap retest. So the high of the last week was here. I let it pull back, close that candle, and when it retests, it gapped up, and when it retests the fair value gap, that's when I made my move. As you can see, I got in the exact bottom of that fair value gap of that candle. All right, go ahead and look at it at the daytime frame. On the daytime frame, we had a simple retest of the WTMA, which is still bullish. As you can see, it's above the 12 EMA, which signifies to us that it is still holding its trend. I wish I would have looked at it one day prior, well, the week prior, I could have got in for a cheaper price at 55.14, but hey, that's okay. And then here's the 2-hour retest, and then off to the races. So I already have liquidity mapped out. Let's go ahead and go to the daily time frame. So right now, these liquidity levels are based off of Fibonacci's because we are at all-time highs. So the red thick line is the monthly liquidity, as you can see up here. And then the thin green ones are daily liquidity. I didn't map out the weekly liquidity as of yet, but if you follow through with this trade idea or join my community, you can join the journey with me. Once I chose SLV, the next step was option selection. And this is where discipline matters. I use Thinkorswim for all of my trading. So I filtered through a high delta leap, specifically in the 0.75 to 0.85 delta range. At that delta, the option behaves much closer to the underlying asset while still benefiting from leverage and time decay working less aggressively against me. So it moves just like a stock. It moves like I had 100 shares of SLV. The contract I selected expires in 2028, which aligns directly with the macro window we just talked about. Here is the option I've selected here. So as you can see, 2028 January 45 call. And as you can see now, it has a delta of 86. I believe when I purchased it, it had like a delta of 82 maybe, but price has been going up, so the delta increases as well. Let's go ahead and hit view trades. I bought it on the 15th. C1, it cost $19.51, and right now it's currently at $22.02. So right now I'm up $250 in profit within the first 5 days, and this thing expires in how many days? 762 days from now. So this is definitely generating passive income to my retirement portfolio. This entire process falls under what we call in the Wolf Empire the Wolf Leap Doctrine. It's a rule-based framework that governs delta selection, expiration alignment with macro cycles, position sizing, and most importantly, when to do nothing. The goal is to remove emotion and replace it with repeatable decision making for long-term options. Here's a sneak peek of the doctrine here. There you go, high delta. It has everything you could ever look for with the Wolf Chart 2.1 inside of it. It even gives us the phases. It is pretty thorough. It even goes over liquidity sweeps. That's my favorite. This is a risk reminder. This is not financial advice, and it is not a shortcut to wealth. Leap trading requires patience, proper allocation, and respect for macro uncertainty. The edge comes from the time in the trade, not enforcing outcomes. If you want to learn how I structure trades like this, whether it's leaps, swings, or confirmation-based setups, I break everything down inside my community, the trading room, using the Wolf Chart system. All the links are in the description. If this helped you think differently about passive income through options, drop a comment or reach out on my Instagram. Trade with structure. Let time work for you, not against you. I'll see you in the next one.